Hello, options players. Michael here, otherwise known as the Rice Pirate. Wanted to give you a brief update on an opportunity, or at least a interesting play that I recorded last week on GLD, and where it's at right now. That order that I made for the broken wing butterfly did not fill. Okay, but it is it's still out there, so I just wanted to get out something really quick and let you know where I'm at with this and what I'm seeing on GLD. In my video last week, I did mention that I watch something that we call the 1030 dance, where the price, once the 10 SMA crosses the 30 SMA, we do watch for a stock or underlying to move up to the Bollinger Band and then start a dance across the 10 SMA once, twice, thrice to go to the 20. Usually goes up and then goes back down before you start getting across again. Well, it sort of failed, but it sort of didn't fail. I was expecting the GLD to move up a little bit further before we had this cross, but now we have this cross. So now we're starting over. We have another start over on the 1030 dance, and it's really to remain to be seen where it's going to go from this point. I would expect that GLD is going to run along this kind of a little ascending trend line and potentially go back up across the 10, but then come back down a little bit and potentially come back down again into this region. If it does move up, we still have a valid potential for coming back down and using the broken butterfly trade that I had talked about. The reason I'm looking at this trade actually is not really to try to profit from a GLD descending. It's because I actually have a position in real gold. I have an account at goldmoney.com, and I have a fairly large amount of money in that is still there. I haven't pulled it out. Sometimes I pull it out and put it in my brokerage account, so I'm looking actually to hedge this. So I don't really want to pay anything for the hedge. So what I'm looking at actually is just like last week, except I'm going to roll it forward into an April 7th rather than the quarterly option, is I'm looking to buy one GLD April 7th 114 put, sell two GLDs at 112s, and then buy one 108. And again, the reason it's a broken wing is because we have a bigger difference between the short leg and the protective put than here. So what we have is we have a current cost of that particular hedge at 19 cents. I don't want to pay anything for it. And with any movement up on GLD, if it tries to go up across that 10 SMA again, that current cost could very potentially come down to zero. So what I'm looking to do is I'm looking to pay $0 for this and just use it just in case it does make a decline, and that protects my real gold position in the goldmoney.com account. And then what I would do is I'd have a risk there. I'd have a margin hold per contract of $2. I'm only looking at doing about 15 contracts on here, so I'd be looking at about $3,000 as a margin hold in my account. And the trade plan would be to close it if GLD touches $112, which is the max profit that you could get if GLD touches 112 at expiry. Now, you're going to have less profit if it touches it before then, but you will have something. Okay, so it just kind of offsets maybe a little bit of the loss that I would have in my goldmoney.com account. For any discussion regarding this concept, please feel free to send me an email or post a couple of questions in the chat or the forum at optionsplayers.com. Thanks.